NFT and metaverse investment firm Animoca Brands more than doubling its valuation to $5.5 billion in 3 months, raising almost $360 million in its latest funding round, led by Liberty City Ventures, with contributions from Winklevoss Capital and Soros Fund Management. Joining us now is Yat Siu, co-founder, executive chairman, and managing director of Animoca Brands. Welcome there, Yat. Thanks for joining us. Quite a long list of titles there. So, just zooming back, we'd like to get your take on the crypto markets, the crypto space right now. Where are we from your vantage point?
So from our vantage point, I think certainly the last year has proven that non-fungible tokens, and particularly in the area of gaming and art, has really brought in a new kind of mass adoption. Right, 3 or 4 years ago, a lot of people moved into the crypto world because they wanted to own Bitcoin or wanted to have exposure to crypto. But actually, this year, what we're seeing, whether it's places like in the Philippines or even places like Hong Kong, for instance, their first experience with what you could call crypto or blockchain is non-fungible tokens. Be it purchasing of land, be it playing games like Axie Infinity or sort of racing, or all of these projects are bringing in mass adoption. Case in point, in rural Philippines, for instance, more people today have a crypto wallet than a credit card, for instance, right? And I think this movement is going to move much faster, not just because of play to earn, but because we generally engage with culture more than we engage with money, right? It's one of those very interesting human things about us. And so I think finally with NFTs, we have brought in the human aspect, the culture aspect into the world of crypto.
That's the amazing thing of NFTs. It's been able to penetrate a different subsector of society. But I wonder, how does the latest crypto market drawdown, the sell-off, affect your NFT investment strategy? Does it? Are you on a buying spree, or what? How does it impact your company?
Well, I guess the expression "buy the dip" is something that isn't just exclusively for crypto traders, right? One of the interesting things right now is that when you look at certainly the premium NFT related projects, despite the dip, actually the price has held up well. Now, what's interesting is that actually correlates very much in the physical world. When you take a look at, for instance, art as an example, even though there's maybe a big sell-off in the stock market, the price of Picasso is still the price of Picasso. It doesn't really seem to change. And that seems to be true for things, for instance, like Sandbox Land, right? We did land sales, and that hasn't affected the price. Maybe the currency, like sand, was affected, but the actual net price, if you convert it back to fiat, actually stayed up quite well. When you look at, for instance, the prices of Bored Apes, they maintained, actually, in fact, increased, despite the fact that the crypto markets have been very much sort of on a downturn. So I think there's many correlations to be had in the physical world as they are in the digital world.
So let's talk about the correlations and the relationships, because obviously, as somebody who's just raised some money, you're not going to say your valuations are high, but $5 billion definitely is a big number. What justifies that valuation, and what are you using for comps? What are you using for multiples and comps? Are you pricing yourself against the likes of, let's say, Electronic Arts and Activision Blizzard, or auction houses? What exactly how are you valuing your company against what?
So Animoca Brands is a little different than most companies out there because we're not your traditional business. We have really multiple arms, right? Some people look at us as an investment firm. We're not an investment firm. We don't have LPs, right? Everything is invested out of our balance sheet. So the value of our portfolio basically is accrued into the balance sheet of the company. Examples, for instance, of those portfolios are, we're lead investors in Sky Mavis, that was Axie Infinity, back in their seed series, for instance, right? Or, early in OpenSea or Dapper Labs or Wax or Decentraland, right? And but then we have an operating business as well. So, we're the owners of the Sandbox, or we're the owners of Quid, of Tower, of Gamey, right? So I think we are quite unique in the way that we're constructed. There's another thing about us that is very different from the traditional organization, which is that we use and look at tokens as resources, which basically means we're generally not sellers because we need them to operate. For instance, we need the ETH so we can sort of mint. And when we generate more ETH, let's say, for instance, like in yield farming, we do it as a way of generating resources so that we are able to continue minting, at a low cost or no cost, relatively speaking, as opposed to exiting into fiat. And I actually think a whole new generation of companies are emerging this because they understand that token usage is a resource. We have large reserves of flow because we need to be able to use it, for our applications and flow, for example.
I guess my question is, what kind of metric were investors using when valuing your company to invest in? Was it based off of revenue or assets or margins? What were they doing exactly? What kind of multiple were you selling at?
So actually, it was a combination of both. But I would say that generally speaking, more weight was given to the operating metrics. So essentially, you could say, the operating metrics of the business in terms of its growth is perhaps given more weight than the assets themselves, because our assets are, of course, very crypto heavy and they are more volatile. So I suppose the people would probably provide some kind of discount. But I think that's how we ended up having investors lead with that valuation, and we're fortunate that they came into that. The space for us, if you look, for instance, we reported our financials, for instance, basically, actually just in January for the 9 months, right? And in the end of November, we had $16 billion of crypto reserves. Of course, that would have been fluctuating, relatively speaking. And then, of course, we also reported our income and our operating numbers. And I think the total income was, if I remember right, somewhere between like close to $600 million. So generally speaking, it's growing quickly, but it's also hard to benchmark, right? It's very hard to benchmark because there's not a lot of companies like us out there for the time being.
So I just want to ask you about some of your specific investments. Like if you look at Axie Infinity, for example. So Axie Infinity, one of the things that caused it to boom was the play to earn element and the fact that in countries like the Philippines, people were using it because it was, a better way to earn a living. My understanding is that's changed a little bit. It's not quite as potent for actually, earning a living as it once was. And I guess my question is what's the future for this? Do you think that the Axie Infinity will continue to play that role, people supplementing their income? Does it have legs in that sense, or do you think it will kind of pivot to another use case?
So, I mean, I think the example, what's powerful about Axie Infinity and generally assets in the blockchain is that because we own the property, because it's decentralized private ownership, in this case of Axies, right? New innovation is built on top and new value is created. What sometimes people don't fully appreciate is that the growth of Axie actually didn't happen because in traditional game space, you'd open up an office in the Philippines, you do marketing, and you sort of grow in that market. But actually what happened was is that a separate band of people that ended up forming a new company called Yield Guild, right? Which is also one of our portfolios, ended up constructing a rental business on top of Axie, and created a new business model. In the same way that Uber or Lyft created a new business model on the private ownership of cars, and basically added new value. And actually, that is what originally drove a lot of the growth in places like the Philippines. So this is something that we think will happen on top of many sort of NFT games because of that paradigm. Now, one thing that's interesting is that with this billions of dollars of new value generated across the Axie universe, because they're on blockchain, meaning that the value can flow to other ecosystems, the rest of call it GameFi or NFT gaming has also boomed because people in the Philippines are making a fair amount of money from this. Not all of it goes out into fiat and living. A lot of it goes into investing in other projects to generate yield. The metaverse worker today doesn't play one game. He plays 5, 6, 7 games. He tries different things. It's not unlike the gig economy in the physical world, except now he doesn't have friction. He doesn't have to move, from his, morning job to his driver job or do his teaching job afterwards. He can just simply do this on his computer.
So we've asked this question to several metaverse investors. The metaverse in a lot of ways is a bet on the future. When you look at some of these games right now, they're not super accessible to the mainstream, right? I mean, I think Sandbox is a pretty good example. Like if you look at their alpha round, it was pretty expensive just to get in. It's not super easy for the average user to kind of get involved with this action, right? I don't know if you disagree with that, please correct me. But I guess my question is like, when do you think that's going to change? Like when are some of these games, if you will, like when will they become more easy to use just for like the average consumer?
Well, I think there's a few points, right? The first one is that a game like Sandbox is basically designed really for people who are already aware in crypto. Although I have to say that, in places like Hong Kong that we anecdotally meet and talk to, the very first experience in crypto is, oh, I have some sand, or I just bought some Sandbox land, right? So that's kind of happening there as well. But I would say it's also about the motivation and the reason to do it. You look at places like the Philippines, in rural Philippines, right? This is not your typical market where you kind of say, oh, look at the crypto adoption that's happening there, right? They're not people usually considered to have very high education, although their English is perhaps very good, right? They're not necessarily considered to be very financially literate people. And basically all the growth is happening in these places, which basically means that if you have the right motivation, then it's okay. One of the powerful things about motivation is that actually opening up a MetaMask wallet is actually much, much easier than opening up a bank account. Actually, opening up a MetaMask is easier than playing a tutorial of a new game. Right? If you think about trying a new game, it's actually very complicated. So I think this is sort of the power of game design as well, that it can bring people, and we really believe that it's going to bring mass adoption because it is something that, designed well, can make it smooth and sort of relatively painless experience to get into.
So, as an investor, where are you finding the values right now? You were talking about new business models happening in this space. What exactly do you think is undervalued, and what do you think is overvalued, for that matter, while you're deploying capital to invest?
Well, I mean, given our investment style, if you're paying attention to how we're investing, sometimes doing several deals a week or more, we remain very, very bullish. In fact, if markets are down, that's great. We love it even more because that means we can invest more, for instance, which was our strategy back in 2018 and 2019 when we got into the field in a very big way. So, to us, this is an opportunity. The macro to us just seems very logical. There's, really, if you think about a DeFi space and blockchain gaming, we're still just talking maximum like tens of millions of people, right? There's 4.6 billion people online. There's 3.2 billion people playing games, right? So these, from our perspective, 3.2 billion people who already have a relationship with virtual assets as if it was one of ownership, even though it's completely rented. And so we look at, for instance, the gaming industry that has about $100 billion of rental goods that are being sold. What happens when you change the rental economics to one of ownership? That's actually what's happening with blockchain gaming, for instance, right? Where people look at that and say, oh, how can you possibly pay that kind of money for, a virtual car, for instance, was, we had some of them auctioned for like 360,000 US dollars, which is the same as a Lamborghini, except a virtual car actually makes you money and a Lamborghini is a depreciating asset, right? So those are some of the things that people start to understand, and then it becomes really a solid or sound investment from their perspective, one that can also be fun.
Yeah, I wonder your thoughts on the Web3 debate, and this piggybacks off of Emily's comment, about accessibility. And this has been raised by Jack Dorsey, that the Web3 world is becoming more centralized with more VC funding. Is that something you agree with? And is that a bad thing or good? Or what's your position?
Well, the way that we look at the growth of everything happening in blockchain and Web3 is like entirely like the construction of new nations, right? Whether this is Sandbox or Axie or what we're doing with Rev Racing or even games like Phantom Galaxies, we're really creating new communities, and the token infrastructure provides energy and value into those communities. So then it comes about, because these tokens also represent governance into the ecosystem, then it's a question of how you distribute it. And so the criticism, of course, is that if you're raising a lot of money from VCs, then they're the ones who end up having a lot of control, right? And the criticism then, of course, is that they reap all the benefits, and then basically the consumers or the end users are the ones left holding the bag. So really, the strategy around this is, like any kind of nation building, is how do you build it up in a way that is equitable? So you look at the white papers, for instance, you say, well, how much goes to the community versus how much goes to investors? If, for instance, 5 or 10% of the supply of the tokens goes to investors and the majority goes to the community, 50% that you can earn over time, then even though the investors are putting money to start kickstarting it, you can still earn it over time playing the game, meaning that there's a way for your labor to be rewarded, right? So what Web3 is really a fantastic and incredible experiment in designing new consensus for the future. We got there from going from feudalism into democracy, but then from democracy we had different kinds of democracy, representative, or all sorts of different formats, right? Democracy in Europe is actually quite different than democracy in the US, but they all serve a purpose here, which is to try to build a consensus mechanism to basically run their particular societies better. Tokens is exactly that. And I think we're going to see many, many more emerge as we try to optimize this experience. And so I think Jack Dorsey's criticism on Web3 is just because he sees what he sees now relative to his position on Bitcoin, right? Which of course has a very, very different mechanism that he thinks he's judging it, I think, from where we are today. But where are we going, right? The societies, democracy didn't build overnight. Neither will the consensus of the token infrastructure that we're seeing today. We're not done yet, right? We've still got a few billion users to go.